Welcome back to This Week in Finance, where you can keep informed and up to date on everything business, property, finance and investing in the UK. Today we will look at the crude drama ongoing in BP, five-finger discounts in the high streets and unhappy hours in pubs. Mr. Looney plunged the oil company into crisis by dramatically quitting his post. Some £2 billion was wiped off of BP's market valuation. Mr. Looney had a reputation in the company for flings with colleagues, and that the BP board were now paying the price for giving the executive a pass. They added investors will be up in arms. The next 2 weeks is going to be a crucial period for the board. Are investors really going to be up in arms about this? Is this such a huge concern as it has been drawn out to be? I'm more keen to see how they carry on with their progression in the future. Whilst it might impact their ESG credentials due to the poor governance displayed by both the board by allowing the CEO to do this and the CEO for having a bit of fun in the workplace, it may have a medium-term impact on BP's customers or relationships with the customers, as it could be seen as a hostile work environment. It may also be more challenging for BP to find and retain top talent. BP shares have already recovered, suggesting that investors aren't that bothered. They remain well placed with a strong balance sheet, and realistically, there are bigger concerns on the field. Mr. Looney informed the company that he now accepts that he was not fully transparent in his previous disclosures. He did not provide all of the details of all relationships. Mr. Looney secured the top job just before the first pandemic lockdown, having started out as a drill engineer to drilling staff in the office. BP is now reportedly under pressure to claw back millions in bonuses paid to Mr. Looney. If the company has performed financially well, is it really fair to claw back those bonuses from the chief executive? Now, I understand voiding a portion of that because he did lie to the board and subsequently the company, and it has obviously made a mockery of their reputation. Stonegate Group, which owns chains including the Slug and Lettuce and Yates, said it was raising prices at 800 of its venues during peak times, such as weekends, to help cover soaring costs. The flexibility may mean that on occasions pricing may marginally increase in selective pubs and bars due to the increased cost demands on the business. Truth be told, this doesn't surprise me. It would appear very good for the business because they are agile. This means they can control the supply of alcohol. By increasing the prices, it means they can have a higher level of gross profits, which is a bonus for the company and can allow them to deal with a lot of the high wage expenses. That said, it's not very good for the consumer. If you're going to a pub and you're unsure on the pricing because the menu doesn't accurately represent it, or even worse, there isn't any pricing numbers on the menu, then that's a nightmare. I don't want to deal with that. That said, it's not a very big impact for me because I usually avoid pubs at peak times anyway. Why can't they just up the prices and leave it as it is? I think what I would do is have a higher level of base prices, but encourage trade on days where things are quite slow. That way at the weekend you're still going to get that weekend trade by just being the best place in the local area, but at the same time you can really benefit over the week by having some very attractive promotions ongoing. More retailers have warned that a new epidemic is becoming serious enough to eat into their profits. Some of the country's top retailers are warning that a spike in shoplifting is putting both revenues and staff at risk. Now, the article continues on to talk about the policing and how that they've seen a large increase in the number of retail theft. They also mentioned that only 6% of burglary cases are actually being solved annually, and are suggesting there are issues with the police. What interests me is, does this make the online retailers look more attractive once more? You had the business case during the pandemic that these companies that were selling goods online, they were making a lot of money because the high street stores were shut. Then following the pandemic, you had the concern that these online retailers were seeing a lot of people exploit their returns policy. However, the high street shops now are suffering from a lot of shoplifting, and that is something you can argue that the online retailers don't have to face as a risk. Do you think it would now be a good time to be purchasing shares of the online retailers given their very depressed share price? Or alternatively, do you still think the high street is king? Use of cash has risen for the first time in a decade as families turn to notes and coins to help them during the cost of living crisis. Physical money fell dramatically during the pandemic, well obviously. Growing fears about inflation and the rising cost of living led to some consumers turning back to an increased use of cash as a way of managing a limited budget. I actually find it more challenging because I know then, okay, I've spent £100, well what do I do? Well, I need to take some more cash out of the cash point, and you end up spending a lot more. I've actually found that it's easier to use debit cards because eventually when that card declines and you can set controlled limits online, it basically means you're stuffed, you can't do anything about it, and you can't spend any more money. Cash use is on course to half over the next decade. It predicts that notes and coins will be used in less than 7% of all transactions by 2032. This really highlights the value of companies like MasterCard and Visa. They are so dominant and cash can't really fight back. Now, I'm not saying we're going to be in a cashless society in the near-term future, but it does seem likely that we're going to see a lot less cash usage. Eventually it'll get to a point where people don't even deem cash significant enough anymore and it can easily be removed from society. That said, it's probably going to be quite a long time before that happens. Last week, Martin Lewis issued an urgent warning. To find out more, click here.